Roger Martin was appointed Dean of the University of Toronto's Rotman School of Management back in 1998. And if he's left any footprints after his nearly 2 decades there, we will see business executives now and in the future who have a very different and more ethical approach to capitalism. Mr. Martin is signing off from his post at U of T, so we thought we'd get him in here and find out more about those footprints he's left. And so we welcome Roger Martin back to TVO. It's good to see you again.
That's great to see you, Steve.
Well, when you got that job back in 1998, what did you see at that time as being your and the school's mission?
It was to make sure Canada had one truly world-class business school. I felt, we're in a globalizing world. Canadian businesses needed to be global players to have Canada be a prosperous place and a place where great talent wanted to be. And it needed a great business school to make sure that great young students could stay in Canada if they wanted to, and we could attract students from across the globe, because when people come to school in a country, they often stay in a country, so you could attract in talent. And so that was the singular goal. We want to make Rotman School one of the world's great business schools and a destination for students, and something the country could be proud of.
And we should remind everybody, Joe Rotman just died not too long ago, the guy who bears the name of your school.
Yeah.
He was hugely influential, I guess, in having it come together.
He was. For sure, I wouldn't be sitting here doing this right now. I wouldn't have been dean for 15 years had Joe not given his gift, which happened before I got there, about a year and a half before.
How much did he give?
I got there. 18 million the first tranche, and another 18 million the next, and there'll be more to come than that. But he also had a view that U of T and Toronto and Ontario needed a great business school. And was willing to invest behind it. And since there was that investment behind it, it felt to me as though it wasn't a crazy pipe dream.
What was the overarching philosophy or approach or attitude towards business/capitalism that you wanted your graduates to leave the school with?
That it's a positive sum game. Right. I hate kind of zero-sum business people, which is, I'll make a buck if I get it out of your hide. I love business people who say, let's see, if we can have a great company that produces great products that make our customers better, we can hire great employees, we can have, they'll all pay taxes, we'll pay taxes, that'll invest in the infrastructure that'll make whatever our city or our province better off. Just have a positive sum game where everybody wins. And I think it's one of the beautiful things about business at its best. Everybody wins. The community wins, employees win, the shareholders win, customers win, and that's what I want people to go off saying.
Except that the people who believe in a more, can I put it, rapacious view of capitalism thought you were a bit of a wet. Can I put it that way?
Sure. I mean, some of the things I've written, there are people who don't like very much. My 2011 book, which we've talked about before on your show, that sort of indicted a lot of what goes on Wall Street. They don't like much, but I guess that never bothered me. I think really good business people, really good students, they want to do the right thing, and there are plenty of them. And what I'd like to do is have them overwhelm the rapacious ones, and have the rapacious ones feel isolated, not part of the mainstream. And that's where I think where business gets into trouble, when the rapacious zero-sum gamers become the mainstream, and then everybody sort of says, well, I guess that's the way business is done.
I wonder who has the upper hand now, the corporate social responsibility people or the rapacious capitalism people?
I think it's a real duel right now. I mean, I do think that the folks who make an argument that says we need a better form of business and the rapaciousness is really, really costly. 2008, 9, and the fallout certainly helped their cause. I would say before that, I think the rapacious folks were saying, hey, we'll keep dancing till the music stops, and not. The famous Chuck Prince, CEO of Citibank, said in the summer of 2008, we'll keep dancing till the music stops. Well, when the music stops, a lot of people got really
damn near took the whole
hurt.
Financial system down with you.
Yeah. And so I think the people who say, we just can't have that attitude. We've got to keep, in some sense, the music going in a sensible way, not in a crazy bubbly way, so that the average working family in whatever in America or there or Canada can say, if we work hard, if we save and invest, we'll have a better life. Our children will have a better life. I mean, it's important that people have a confidence in that.
You'll remember during the last presidential election in the United States, Mitt Romney got into a bit of a debate with somebody on the hustings.
Yes.
And the tagline of the debate was, "Hey, mister, corporations are people too."
Yes.
Well, I've always been curious as to what you thought about that line.
I don't like that line because it actually, I mean, it actually makes it sound as though, there are poor people, middle-class people, rich people, and then really big people, which are corporations. And no, they're an abstraction. They're an entity that society has given the right to operate. They're limited liability corporations, and I think they need to act responsibly. Now, I don't believe, right? There are people who say they either have to make money or act responsibly. It's just, I just think that is one of these classical, kind of false dilemmas. And for me, I love, one of my favorite companies on this front is Johnson & Johnson. 1948, they established, when they go public, they have a credo carved in granite in their lobby of their head office that says basically, customers come first, employees come second, the communities in which we work come third, and if we do all those three things, the shareholders will earn a fair return. Now, this is a company that's now worth $250 billion market cap. The shareholders have done just great. They didn't make some horrible trade-off where the shareholders have to be impoverished because they're being great to their customers, their employees, and their communities. But they figured out something well. They figured out that if you do those first three things, the fourth will just happen by itself. And I think that's the nature of a successful business. The output is profit. It's not an input, it's not a goal, it's an output, and the goal should be making your customers deliriously happy.
It's an output of doing all those other things well, you're saying.
That's right,
Yeah.
That's right.
All right, what about, I want to sort of circle back to those people on Wall Street who think
Yes.
you're a bit of a softie, because, if a corporate executive provides good service to his board, to his customers, to his company, and the result of which he makes $250 million a year because the company had a really good year, the people who believe in the purity of the market would say, great. And I think I've read where you say, that's kind of an obscene amount of money. Who's right?
Well, I of course think I'm right, but my perspective on it is, I actually don't mind it a bit if that CEO was a founder of the company, and as part of founding the company had shares that appreciated by that $250 million in that year. That's great. What I mind is when he or she made the $250 million on the basis of stock-based compensation, that the board said, we will pay you in stock if you do well, because across the entire market, that has not worked out well for shareholders.
A perverse incentive.
It's a perverse incentive.
Get the share price up.
Get the share price up, and it turns out that's a short-term thing. You cannot, because share prices are a function of expectations. You can't keep expectations rising forever, and what that means is executives who are motivated by that kind of compensation will say, I got to pump the expectations up. I'll make a bunch of crazy acquisitions that look good in the short term, or I'll do shady accounting to pump up my stock price. I'll cash out. The stock price will fall after I've left. The shareholders don't get to take back that $250 million that I made. So if empirically it showed that when executive compensation went up dramatically, which it did in the 80s and 90s, between 1960 and 1980, per dollar of net profit produced for their companies, CEO compensation fell. And it fell by a third over those 2 decades. So shareholders were getting an ever better deal. Then we decided we needed to do stock-based compensation, and compensation doubled in the next decade and quadrupled over the doubling in the next decade and has continued to go up. And what's happened? Shareholder returns across the entire market have gone down. So I'm more of a critic. I'm a critic of things that don't work, right? And in this case, it's not an argument. I don't base my argument on the 250 million is obscene. I mean, I may think it's obscene, but I base it on it doesn't work. For everyone that you paid 250 for things to go well, you also paid 200 even when things went badly. And so shareholders are not ahead with this, and it then creates all these incentives to play around with companies, which hurts customers, employees, the communities in which they operate, and that is just too high a price to pay.
I suspect most of the people watching us right now did not have the pleasure of being students at the Rotman School of Management at U of T, so I want to create a little classroom here and have you do a bit of teaching, okay? Because
Sure.
some of the concepts that you have gained a good reputation for, I'd like to throw out there and have you tell us a bit more about what they are. For example, integrative thinking. What is that?
That is the way of thinking that really highly successful leaders do when they're faced with what appears to be an either-or choice. So when everybody tells a young Izzy Sharp, back in 1970...
Guy who started Four Seasons.
Yes, a man who started Four Seasons, built it into the world's finest luxury hotel chain. They said, Izzy, you can either build little motels, like Motel 6 or Holiday Inn or La Quinta, or you can build big city center convention hotels, Westin, Marriott, Hyatt, etc. Those are the ways to win. And Izzy said, well, I like small motels because they're intimate, but they don't have any amenities of the sort business travelers want. I like all the amenities you have in a big convention hotel, 800 or 1,000 room hotel, but they're really impersonal. Instead of saying, I'll pick the lesser of two evils, he said, no, I'm going to create an entirely new concept. A medium-sized hotel. His hotels are all between like 85 and 300 rooms, that has a form of service that is so appealing that it both combines the intimacy. We can charge such a price that we can have the amenities even at that lower scale, and you create the world's biggest and most successful luxury hotel chain.
He found the third way.
He found the third way, and the success is entirely a result of him rejecting the notion that this is an either-or choice that you have to make.
So that's integrative thinking.
That is
How
correct.
about design thinking? What's that?
Design thinking is the way of thinking that combines the best of analytical thinking. So business has gotten ever more analytical and big data. Everybody wants to analyze every decision before making it. It turns out that if you rely on analysis, you fall into a trap, which is a trap identified first by this brilliant American pragmatist philosopher who said, no new idea in the history of the world has ever been proven in advance analytically. So you can't prove a new idea in advance analytically. There's another way of thinking, right, that enables you to invent the future. That's intuitive thinking. And what I call design thinking is the best combination of analytical thinking and intuitive thinking that allows you to grow in an organized way, but create the future at the same time, rather than be analytical completely, in which case you'll eventually stultify and never do anything new, or be entirely intuitive, in which case you'll make enough mistakes that you'll doom yourself. And in my view, you know, the man who we all admire for what a great job he did at Apple was an intuitive thinker in his first stage at Apple. Mm-hmm. Had enough problems that the board fired him, came back and realized it's the combination of the two. I will invent the future, but I will also do it in an organized enough fashion to keep my company going forward. And I think the Steve Jobs' second act is an example of design thinking in action, the combination of those two forces.
So have the thousands of students who have graduated from your institution all left buying into both of these concepts?
I doubt it. I think there are students who do and students who didn't. But a great case would be a young man who came in today, who was a student of mine, who is creating a design thinking software platform to take forward what he learned and make it into a software platform so other people can use it. And students like that, of course, you make the heart sing of the professor, because he's taking it forward and in fact creating a product out of it. And it looked quite good, actually.
Let me get you to talk a bit about this other thing that you've been involved in, quote unquote, which actually is not named after you, even though it's called the Martin Prosperity Institute. Who's it named after?
It's named after my mother and father.
Okay.
Lloyd and Delphine Martin. Delphine, my mother, who passed away a couple of years ago, but that's who it's named after.
And this has been kind of another institution that you've wanted to spend increasing amounts of time with, eh?
Yes.
What's the mission of that place?
Well, when I stopped, left as dean, as you mentioned, Joe Rotman and David Naylor, the then president of University of Toronto, my friend David, said, don't leave the university just because you've ended your time as dean, stay. And Joe had previously named this center in honor of my parents, to say thank you to me for he thought I did a good job.
He wanted to name it after you, is the story I heard, and you wouldn't let him. Is that right?
That is not entirely true.
No?
The university wouldn't let him. I was happy that it couldn't be named after me, because I would have been embarrassed. But the university won't allow a center like that to be named after somebody who's actually at the university at the time. And so the compromise was we'd name it after my parents, which made me very happy.
A proud son.
A proud son.
And what's the mission of that place?
The mission of that is to chart a course for the future of democratic capitalism. Like I always do little things, Steve.
Small little adventure.
Yeah, just a little problem. So I see this problem with democratic capitalism. I love capitalism. I love democracy. And if we just take the United States as a paragon of democratic capitalism, or a leading country in that, what you see is, for the first 213 years of its life, from 1776 to 1989, the median family in America by income had a very good prospect of next year being better for them than the year before. There were a few times when it wasn't, the Great Depression being an example, where that was not true for, depending on how you counted, 14 to 16 years. But generally over that period, it all worked out well for them. That to me is important for democratic capitalism, because what is the median family? It's also the swing voter, right? You got to get 51% of people to vote for you. Between 1989 and the present, median income has not gone up one iota. In fact, it's gone down a little bit. An unprecedentedly long time, a quarter of a century, the median family in America has had to experience no net growth.
The kids are not going to do better than their parents.
That's right.
Which has always been the way it's been.
Yeah. And what's different is, the last time this happened for a substantial period of time, the Great Depression, actually the statistics show that the top 1% actually was hurt worse than the median person. Now they could deal with it better because they were rich, but they were actually hurt worse. So the income inequality dipped in that period. The big difference here is a quarter of a century of stagnation for the median at a time when the top 1% has done better than it's ever done in the history of America, and it's continuing along that course. So what I want to ask, and we're studying at the Martin Prosperity Institute, is, well, what about democratic capitalism might have changed that causes this schism between the prospects of the top 1% and the top 10% and the median person? Because I believe, like, if you go back to the Great Depression, that's when in Europe went largely socialist or communist. The communist and socialist parties were active in America. Democratic capitalism actually was under great strain. And I don't want that to happen again, right? Especially given that this situation is much worse, I would argue, for democratic capitalism. And so we're trying to study what is it has changed about the way the economy functions that causes this, and what tweaks could you make to it to get that median income in Canada and the United States rising again.
Whose capitalism do you think is doing better, ours or Chinese-style authoritarian capitalism?
Well, I'm worried that in some respects the Chinese is, and I would love China and love Chinese, but I'd hate to have authoritarian kind of system. Now, so the positive, of course, of that system is a very fast growth compared to ours. The negative is they have as high or higher income inequality as does America.
In a communist country.
In a communist country, yes. The workers' paradise is not exactly a paradise for workers, but other than that, right? So in many respects, Steve, you've identified a motivation for me in this work is I don't want the default to be something that is more kind of authoritarian in nature or kind of socialist in nature. I think democratic capitalism is a great system, and we just have to figure out what tweaks to the way it works, because I mean democratic capitalism is not free markets. There sort of is no such thing anymore. I mean, it's a complicated system where there are regulations and controls that help industries form. There's all sorts of investments, like in universities, university research. Anybody who says America is a paragon of complete free enterprise is smoking something inappropriate. And so the question is, have we let the machinations, what I call the infrastructure that resides underneath that democratic capitalist system, have we let that infrastructure kind of break down? Have we not been investing in the right stuff? What's the physical infrastructure and the knowledge infrastructure and the transactional infrastructure that we need to make sure democracy and democratic capitalism works the way we want? So that's the project.
Can I ask you a question that I hope doesn't sound cynical, but I think there's plenty of evidence to suggest it. How can we hope for improvements in democratic capitalism when, and I'll take the American example because it's so out of control down there compared to the way we have it up here, when huge Wall Street companies are allowed to give virtually unlimited dollars to political candidates who will therefore be in their back pockets, and how is it possible to get any kind of popular reform under those kind of circumstances?
I think it's really tough. I mean, and I always, when I'm in the U.S., I say the two things that just flabbergast Canadians about Americans. I mean, we're similar in a bunch of ways, but two things are, of course, guns, right? Canadians look at Americans, let me get this straight, you can pack heat whenever you kind of feel like it. What are you thinking? And the other is political donations. Like Canadians, I think, just look at that and say, you got to be kidding me. Corporations can spend hundreds of millions of dollars to get their people elected. So I think it's one of the things we are looking at the MPI. It's the system of electing people to a democratic government. I think there's lower and lower voter turnout. I don't think that's unrelated to more and more money being in the system, because the average, that median family, which is what I'm carrying, the median family looks at that and says, it's only one vote, and
the deck is stacked.
The deck is totally stacked. Why should I even be politically active? Why should I go and put signs on lawns for my favorite candidates? So sort of political activity is by the populace is declining, and so that I think it's a good question. In my view, I do think that America is going to have to take steps on that front, or that will fully undermine democratic capitalism.
Well, this is, I guess, the next quarter century of your life's work. So when you get the answers, will you come back and tell us?
I would be happy to, Steve.
That's great.
Anytime.
That would be great. Roger Martin, always good to have you here at TVO. Thanks so much.
It's a pleasure.
Support Ontario's public television. Donate at tvo.org.